Hey, today I'll be breaking down a stock which I feel is a high quality stock with high potential upside. Now, I'll walk you through the investment thesis and why I think this is an incredible buy. Now, this stock I'm talking about is Uber Technologies, and yeah, this is the investment overview, my point of view. And yeah, so let's start with how Uber makes money and its position in the market. Now, their platform is built on three core revenue streams, right? You've got like mobility, the mobility services like the ride-hailing services, which brought about 57% of their revenue, or about $25 billion. And you've also got the delivery arm, which delivered about $13 billion. It's about 31% of their total revenue. And you've got the freight business, which is making up 12% of their total revenue at 5.14 billion. Now, their diversified revenue streams is something that I really like, right? So it sort of hedges your risk as well. And yeah, Uber's revenue generation model is pretty incredibly effective. Why? Because of their commission-based model, and they call it their take rate. And this take rate has increased steadily to 29% in 2025 from 27% in 2024. So now this shows incredible pricing power that Uber's able to flex. And I think amazingly, what's also important is the Uber One loyalty program. I don't see this being talked about enough, but this loyalty program has seen its membership grown by 60% year over year to 36 million members. Now, members who are Uber One, who has a Uber One membership, they typically spend 3 times more than non-members. So seeing this increase at such a fast, incredible rate is definitely a positive sign as well. And not just that, if we talk about market share, right, big players tend to win even bigger. So it's good to see that Uber, who already occupies a market share of about 55% for the ride-hailing, and the next closest is probably Lyft, which is only 6 to 7%. So Uber's definitely way ahead of that. But in terms of like the US food delivery space, Uber Eats is coming in close to second place, right? And DoorDash is at 67%. Now, I think this mix of market dominance is something that Uber can be proud of, right? And something that we should take note of when considering this investment thesis as well. And I want to call out as well the management excellence, right? There's a huge financial turnaround. They actually achieved their very first operating profit of $1 billion in just Q2 2024. And yeah, and they actually grew Uber Eats to over 30% of revenue and expanded the freight, right? So very strong diversification and platform innovation that we're seeing from the management as well. It's not like growth at all costs, but now they are growing profitably as well. And let's dive into the financial numbers, right? That's where the real story is. So that's an overview of the company, where it's been. Let's dive into the numbers and why this makes this company such a great company. Or at least I think is a great company in the coming years. Now, Uber's performance has been exceptional, right? Their past 5-year revenue CAGR has performed at 27%, which exceeds my personal benchmark of like 6%. I know it sounds low, but it's because 27% is extremely high and because it's a fast-growing company as well, right? And for in terms of the return of capital. Invested capital, the ROIC growth, we're seeing at 19%, which exceeds the 15% benchmark, my own 15% benchmark of my thesis. And when it comes to free cash flow, and this is important, right? Like we want to see free cash flow growth, because then with extra cash, the company can reinvest and has many options to grow the business or and to be stable. So we're seeing at 82% free cash flow growth in the trailing 12 months, which exceeds my benchmarks of 8% as well. And net income growth as well is remarkable, right? It's just a huge turnaround play as well. All this is really stunning results with a 9 billion net income in 2024. It's really super incredible to see how the management has turned around this company from 2022, from negative free cash flow all the way up to like positive and in fact fast growing net income for in 2024 and beyond. Okay, and you know what, the market seems to agree as well. You've got the discounted cash flow valuation, which I've pegged it at a 20% year-over-year growth for the cash flow, right, based on the discounted cash flow valuation. And right now they are currently growing at, if I'm not wrong, it's above 50%, 50 to 70%, and I've put it at a 20% growth rate, which gives us a valuation of $114. This means there's a potential upside of 27% for if we use this discounted cash flow valuation. There is an upside of 27% because the current price today is $89. That's the current stock price today. So based on the discounted cash flow valuation, this we should be able to hit the stock price should be able to hit $114 by the end of this year. Okay, and the total addressable market that we are seeing for Uber is almost $1 trillion. Now it depends on how you slice and dice the market, right? If you take in ride hailing, food delivery, freight, etc., right, there is $1 trillion. So which means there's still a lot of room for Uber to grow, right? And if we look at the analyst expectations, they also agree. The analyst price target average is about $105, which represents an 18% upside. So it's slightly lower than my discounted cash flow valuation, right? But it's just good to see that this even analysts agree on this upside, and there's almost 40 buy recommendations from various analysts as well. I think what really stands out as well for me is Google's business model, right, which is very light in terms of like the capital, right? The capital efficiency of this company is amazing. So they at least at this point of time, they don't like own the cars, and there's like they don't or at this point of time, the drivers are not like full-time employees across all these countries, because all those are like huge costs. So Uber is just operating on mainly like a network effect, right? Kind of like a network effect and like a platform play. So it's not so much of a very traditional capital heavy car company or car rental company, right? So I think this is something pretty amazing, and we can see that in the capital efficiency and the profitability of the company, as well as the balance sheet. They have a pretty good balance sheet as well. Now, not all investments is without risk. There is risk, right? And Uber is actively managing all these challenges. Okay, so let's talk about some of this risk and how they are trying to stay competitive. Now, I think one of the bigger risks is the regulatory risk around the driver classification. Now, as mentioned, Uber is sort of like do not employ all these drivers as full-time employees, so that's sort of like cost saving already. But right, there are some legal and public policy that is going against this. Right? Like Uber should take this as full-time employees and give them benefits, etc. So I think there are a couple of ways that Uber is doing this. They are actively in legal defenses and putting up legal defenses. They are doing public policy lobbying. It's an ongoing debate, right? That they are trying to. It's an ongoing debate between Uber as well as the government and the public. And Uber's taking steps to also offer voluntary benefits, right, to anyone without the full-time employee status. Okay, so but if you don't believe that Uber can get out of this, and have governments across the world will force them to hire every single driver, then probably this stock is not for you. If you do believe that's the case, so at the end of the day, this investment thesis is down to what you believe in as well, right? What you believe will happen. On the competitive front, against other companies, right? So it's not just a regulation. They've also got competitors. I think the biggest one right now in everyone's mind, at least in the investing world, is the autonomous vehicles and its rivals, right? So Uber has a clear strategy, right? So instead of like heavy in-house R&D, they are forming strategic autonomous vehicle partnerships, such as with Waymo, with Baidu, etc. So, so yes, I think that's one way that they are mitigating this risk. But the other way as well, they have got a few business models in mind, right? Now, another way is they also want to own their autonomous, at least a set of autonomous fleets themselves. So they're partnering with Lucid, for example, right, to own their own fleets as well. But yeah, I'm not too keen on like them or just focusing on like building out a huge fleet, because that become very capital intensive, and that's not Uber's strength. It's straying away from Uber's original business model of being a platform and a network effect play, right? But they also can't. I do feel they can't just rely on Waymo and AV partners, right, for their autonomous vehicles, because if Waymo does one day break up and go on their own and create their own network, then Uber's in trouble, right? So I think this diversification is something really smart from the management on how they are splitting and hedging their risk, right? And then just going with the market as well. Now, overall, I think this is pretty incredible. And not to forget, right, they've got Uber One program. So as this grows, right, it increases the stickiness to the platform. If EV does come into play through the partnerships or through their own fleet, right? I think this Uber One program, this loyalty program, is going to come in really strong and increases the whole value of the Uber network as well. So yeah, with this valuation and so many positive things going on for Uber, I do think the stock is in a place where there's great risk reward right now. And just to reiterate, I do think this is a buy today, or at least I do feel, based on the DCF calculation, there's a 27% upside by the end of this year, right? Or at least, if it's not by the end of this year, by mid next year or end of next year as well. So if you average this out, I think this is a great return year over year, at least for this and next year. You've also got analyst expectations, which sort of like they iterate in terms of, they mentioned that it's an 18% upside, price target of 105, and yeah, 18% upside to today's price, which is at $89 stock price now. Hope you found this useful. Like and share and subscribe, for more of this investment thesis. Now, take care.